All right, traders, it is time to start digging a bit deeper into practical applications of the information we've been learning so far. And in this lesson, we are going to break down the strategy order functions, at least the entry and exit order functions. So what I have in front of you here is essentially a blank slate to work with. All I'm doing here is importing my Zen library. This is just so that we can access the bullish and bearish engulfing candle patterns without having to write the code out, to keep the script a bit simpler and tidier. We're getting some user input. All we're getting is a look back period for swing highs and swing lows. We're getting a multiplier, which is an ATR multiplier. That's used for calculating our stop loss distance above and below these swing lows and swing highs. And then we have a risk reward multiplier, which is used to manipulate our reward distance from the entry price. Then we're getting the ATR value from the ATR inbuilt indicator. We're detecting our bullish and bearish engulfing candles, and we're just plotting NA to the chart. And using all of this information here, we're going to build an example strategy. Now, it's not going to be profitable. We're not going to go into too much information just yet about adding filters and multiple conditions, layering conditions on top of each other to build an edge over the markets. We're just going to focus on the theory behind entering and exiting orders. So let's get started with the code for this lesson. The first thing I'm going to say here is we want to detect our buy and sell signals with our filters applied. So we're already detecting our bullish and bearish engulfing candles, but now we need to detect our buy and sell signals based on these patterns and some other filters we're going to include. So for this lesson, we're not going to add actual filters, market condition filters. We're just going to add filters to, one, limit how many trades we take. Because if we take every bullish and bearish engulfing candle pattern on our chart, we're going to have thousands of trades. It will be too many. So we need to add some simple filters just to bring that number down a little bit. And we also need to check if the ATR is NA. Because if it's NA, then we cannot calculate our stops and targets and will be placed in a trade without a stop or a target, and the trade will never close. Now, you might wonder, when would ATR ever be NA? And that is on the first 13 bars of your chart. Since we have a look back period of 14 bars, the ATR will have an NA value until that 14th bar. And if we get a signal detected in these first 14 bars, we'll enter long or short, but our stop loss and take profit will never be calculated because it'll just be NA. Anything multiplied by NA is NA. And if our ATR is NA, that's a problem. So we need to check to make sure that's not NA. That also applies to other indicators if you use them in your script. So if you're using moving averages or the RSI, for example, you need to check to make sure that they're not NA and that they have started calculating their values on these early historical bars. But anyway, let's move on. So we need to detect our buy and sell signals. That's quite simple in this particular example. So I need buy signal and sell signal. Buy signal will be true when we have a bullish engulfing candle, and that bullish engulfing candle's low is equal to TA.lowest low over our look back period, so the past 7 bars by default. And our ATR value is not NA, so we need to pass in that ATR value or variable into the NA function. If you were to say this, for example, ATR not equals NA, this will produce problems with your script because you cannot compare a value to NA. The correct way to do this is to use the NA function, which will return true or false if this value is NA or not NA. Now I can do the same for our bearish engulfing candles. So sell signal is, do we have a bearish engulfing candle? And is that candle's high equal to the highest high over our look back period? And is our ATR value not NA? This gives us our buy and sell signals. Now we can draw this data onto our chart. So I'm just going to copy this code over to save time. We're just plotting a shape, a triangle up and down, green and red, above and below bars based on whether we have a buy or sell signal. So now if I save my code, we should be getting red arrows and green arrows plotting above and below swing low and swing high engulfing candles. So far, so good. The next thing we need to do is calculate our stops and targets. So I'm going to do that beneath my detect buy and sell signals code. Again, I'm just going to copy this code over to save time since this is not the point of today's lesson. This lesson is about strategy entry and exit orders, but we need to have our stop loss take profit calculated before we can start entering orders into the market. So this code here is calculating our long stop and short stop based on the lowest low over our look back period and the highest high over our look back period. And then we are adding or subtracting the ATR value multiplied by our ATR multiplier. That gives us our long stop price and short stop price. Then we calculate the distance in pips. So to calculate the long stop distance, if we were to go long on this trade here, we need to subtract our long stop price from the entry. This will give us our long stop distance in pips. And then if we add that pip distance to our entry and multiply that by our risk reward profile, we will get our take profit price. So that's what we do next. We add or subtract for short trades the long stop distance multiplied by our risk reward setting, or the short stop distance by our risk reward setting for short trades. This gives us our long stop, our long target, our short stop, and our short target. So far, so good. We have all of the information we need in order to start entering demo trades or mock trades into the strategy tester. Keep in mind, this will not be profitable. This is purely for example purposes. Don't go and try to trade this. You will lose money. But hopefully by the end of this lesson, you'll have a thorough understanding of how to enter and exit your trades for when we do start building profitable trading scripts. So moving on, we have our stops and targets. We have our buy and sell signals being detected based on a candlestick pattern and some very simple market conditions. We have user input here to manipulate our look back period for our swing highs and swing lows, our ATR multiplier for our stop loss distance. So by default, it's a 1 ATR stop from the low or the high in the case of a short trade. And our risk reward profile is just 1 to 1. So if we have a 10 pip stop loss, we have a 10 pip target from our entry by default. But you can change that in the settings menu, which we'll get to at the end of this lesson. But now that we have all this information, we need to create a couple of new variables here. And these two variables we're going to create are going to save our trade stop and our trade target. So in today's example, we are only going to allow our script to open one trade at a time in any given direction. So if we're involved in a long trade, we stay in that long trade until we are stopped out or our take profit is hit. And if we receive any new trade signals while we are involved in an open position, those signals will be ignored. So how we do this is we need to save our stops and targets. I'll explain why we need to do this in a moment when we get to exiting our positions. But for now, we need two VAR variables, persistent variables that are saved across all of the bars on our chart. And we need a stop and a target. So I like to call mine, the naming convention I like to use in my own scripts is just T_stop. The T is for trade. So trade stop equals, and it can just be 0.0 by default or any other number, float number by default. It doesn't really matter because we'll be overriding this whenever we detect the signal. Same with our T_target, 0.0. These two variables will be used to exit our trades when one of them is hit by price action. We'll get to that in a moment, but before we can exit a position, we obviously need to enter it. So that's what we do next. We enter our buy orders and enter our sell orders. So to enter a buy order, we need a few conditions to be met. First, we need buy signal to be true. So we can say here, if buy signal is true, then enter tab. We want to enter our position using the strategy.entry function. Same with our sell signals. If we have a sell signal, then we want to use the strategy.entry function to enter a trade. So now, if I hover over our entry function, we have a bunch of parameters to work with here. First, we have ID. That is the ID of your trade. So in this case, because we are buying this market, if buy signal is true, I'm going to call mine just long. The ID of this trade entry or position is just long. You can call it whatever you want, but you need to reference this ID when you want to exit your position, your long position. So it's important that you set it to something practical. So ID equals long. Next, we need to set the direction of the trade. Obviously, this is a long trade, so we'll be setting ours to strategy.long. And that will set our direction to long. Next, we have quantity, limit, stop, OCA name, OCA type, comment, when, and alert message. All of these parameters are optional. As far as I know, these two parameters are mandatory, and if they're not mandatory, they're like the minimum you will need in order to enter a position and exit that same position. Quantity, you can override if you want to, but if you don't override it, it will just be set to whatever you set up in the Properties tab, which is this setting here. So by default, it will only enter one contract if we do not change quantity, which I won't change for this, at least not now. Maybe we'll play around with it after we're done experimenting with entering and exiting trades. But for now, I'm going to keep things extremely simple. This is all we are going to do. We are going to enter a long trade with the direction of long and the ID of long, and all the other parameters here will stay the default parameters for now. Same with our short trades. We need to give it an ID. I'll call mine short, and the direction is strategy.short. So far, so good. We are now entering our long and short trades, but now we need to make sure that we exit them as well based on whether our stop loss or take profit is hit, because if we do not exit them, the strategy tester will just open a position and never close it, and we'll get no data here. But before we can exit a position, we need to save our stops and targets to reference in the strategy.exit function. To do that, it's very easy. T_stop is reassigned to long stop, our long stop price value. And T_target is set to long target, which we calculate up here. And now we can do the same for short trades. I can copy this down and change this to short stop and short target. And now let's save our code and see if it compiles. And there we go, it compiles just fine. But what we're doing here is we're entering long when a buy signal is detected, and then we are closing that long position when a short trade is detected. So we're just sort of swapping between long and shorts based on bullish and bearish engulfing candles. And as you can see, that's giving us some random results. So what we need to do now is exit our trades based on whether our stop or our fixed target is hit. Our fixed stop loss or our fixed target is hit. I'll show you in future lessons how to exit trades based on candlestick patterns. But for now, to keep things simple while we're learning this material, we are mostly, for the next few lessons, going to be sticking with fixed targets and fixed stop losses. That makes things very easy for us because now I can write some code here that says manage exit orders, or in other words, our take profit and stop loss. And to do that, we use the strategy.exit function. If I hover over this function, we have a lot more parameters to work with. We have an ID, which is the order ID, the from entry parameter, which we need to use to specify which trade we want to exit. So from entry can also be thought of as from entry ID. So if we want to exit a long trade here, we could say ID equals long exit. So this particular trade order's ID is long exit, and we are exiting from the entry ID of long, which is this guy here. And we have some other parameters here. You can specify the quantity, so you can partially close a position if you want to. You can also use quantity percentage, so you could close 50% of your position if you want to. Then we have profit, limit, loss, and stop. Profit is how many ticks, so you could set a pip-based take profit. Limit is price, so profit is how many pips away from your entry to exit your trade. Limit is which price to exit your trade for a profit. Loss is how many pips from your entry to set your stop loss at. And stop is the stop loss price. So in my personal scripts, the way I like to work is using price values. I find that to be more intuitive to myself. So that is what I'll be teaching you. But if you wanted to set your take profit to 10 pips away, you would set your profit value to 100, not 10, 100, because it is in points, and 100 points is 10 pips. So that is how you would set a fixed pip-based take profit or stop loss. For today, we are using a limit, so a profit limit order, and our limit is going to be set at T_target, so the trade target price, and our stop is going to be set to the T_stop price. So when we detect a buy signal, we will enter long, we will save our stop and target, and our strategy.exit function will manage our stops and targets for us. Now notice that the entries are within the scope of our if statements. So the entry function is only triggered if buy signal is true. But the exit function exists in the main scope of our entire script, which means this function is executed on every single bar on our chart or every single tick on real-time data. What that means is we need to tell this exit function when to execute. Now you can use the if the current bar's high is greater than our T_target, or the current bar's low is less than our stop price. You could do this if you want to, but the strategy tester will automatically close our position if our limit is hit or our stop is hit. All we need to do is tell it when to check these prices. To do that, we use the when parameter. So when equals, and now we need to pass in a Boolean true or false value. The easiest way to do this is to check, is our strategy.position_size greater than 0? So position size in strategy scripts will be a positive or negative number based on whether you are long or you are short. So if you're short, you'll be negative X amount of contracts. If you're long, you'll be positive X amount of contracts. So we can check, is our position size greater than 0? If it's equal to 0, then we're flat. We don't have any positions open. If it's greater than 0, then we're involved in a long trade. And if we are involved in a long trade, we want the strategy engine, the tester, to constantly analyze our take profit and our stop loss. And if any of the bars in our chart hit our take profit or our stop loss, the strategy will exit our trade for a profit or a loss. So now we need to do the same thing for our short trades. So if I copy this line of code and paste it in down here, change this to short exit, change our from entry to our short ID, we can leave our T target and T stop as our take profit and stop loss, because these are overwritten whenever a new trade is entered, whether that be long or short. And we are going to set up our script so that we can only be involved in either a long trade or a short trade. We cannot be involved in multiple trades at once. So we can't be involved in more than one long trade or more than one short trade. And we also can't be involved in a long and a short trade at the same time. So now I need to flip my position size check to -0. So is our position size less than 0? Then we are in a short trade and we want to check our take profit and stop loss. And we want to analyze our take profit and stop loss in relation to the relevant order. So if we're in a long trade, we need to specify from entry long ID. If we're in a short trade, we need to specify from entry short ID. So now when I save my code, we should be entering and exiting trades based on our take profit and stop loss. But before we continue, let's plot our take profit and stop loss onto the chart. Now with indicator scripts, I do this a little bit differently, but with strategy scripts, I like to plot my take profit and stop loss like this. If I paste this code in, what this code is saying is it's saying plot our trade stop and our trade target only if our position size is not equal to 0. If it's not equal to 0, that means we are involved in a trade, either long or short, and we want to plot our saved take profit and stop loss onto the chart. T stop will be red, T target will be green. We use the style line break so that our lines do not join between trades. Now if I save my code, we should be getting our stop loss and take profit drawing across the chart until one is hit, as you can see here. Now you can see an overlapping trade here, and there's going to be some problems with our script. And what is happening here? You can see our little comment, short, -1 contract on this bar here, and we are drawing our stops and targets. But what our script is doing is it's only entering one position short. But when another signal is detected, here we have 2 more signals being detected, and our script is overriding our stops and targets with these new signals, stops and targets. So what we need to do in order to prevent that is add another check to our buy signal and sell signal filters. And we need to say buy signal is true if we have our bullish engulfing candle pattern and it's a swing low and ATR is not null or not NA. We have an ATR value, and strategy.position_size is equal to 0. So we are flat, we don't have any trades open, and copy that to our sell signal as well. So now we will only set buy signal and sell signal to true if we get a signal being generated, but we are not involved in a trade already. So watch what happens when I save my code now that we've added these two checks. These two signals will go away, and the tester system will just simulate this original trade. Our stop will draw all the way across our chart, and our target will draw all the way across our chart until one of these is hit by price action. So watch what happens when I click save. There we go. We are now ignoring any signals that are detected while we are already involved in a position. So if our position size is not equal to 0, we are long or we are short. We want to ignore buy and sell signals until that trade plays out. And this pretty much what we have right here is the beginnings of a strategy script. Literally all that's left to do now is add more sophisticated filters. So right now we are only trading bullish and bearish engulfing candles that are swing highs and swing lows. That's it. What we should be doing is checking multiple indicator conditions, market conditions. You might want to add filters to your candlesticks to make sure that they're not too large or too small for that matter. You might want to play around with your risk reward profile. So if you want a tighter stop loss, we could set our ATR multiplier to 0.5. And now we'll be having half ATR stop losses. Notice that the stop loss shrunk quite a bit there. And so did our take profit distance. You can also manipulate your risk reward profile. So if I set this to 2, and you can see that this trade just went away because we are still involved in this trade with these parameters here. This trade has not yet played out. What we have here is a half ATR stop loss, very tight, but a 2 ATR or 2 risk distance to our take profit. So if I throw on a short position tool here at the close of this bar and put my stop loss at that price or as close as possible, drag my take profit down to this green bar, you can see that we have a 2-to-1 risk reward profile on all of our trades here. And if I open up the strategy tester, we're starting to get some metrics here. 503 closed trades with a 32% win rate with a 2-to-1 risk reward profile. Now, as I said at the start of this lesson, I don't think there is any way we could manipulate these settings here to produce a profitable result because this strategy is not a strategy. It's just buying and selling engulfing candles. We need more information. We need more filters, more conditions layered on top of each other to build an edge over historical price data. We'll cover that in the lessons to come. But to wrap up this lesson, let's go into a little bit more detail about our entry and exit functions. So for example, with our entry function, we can override our quantity. So let's set quantity to 100,000. That's one standard lot in Forex. If I save my code, keep an eye on the numbers above and below our trades. So now we're negative 100,000 contracts, positive 100,000 to close out that position, long 100,000 contracts. So in PineScript, you can only set a fixed position size in Forex. I'll show you in future lessons how to set a dynamic position size. It's a little bit complicated, at least compared to what we're covering in this lesson. I don't want to overwhelm you guys with too much information, so we'll build on each lesson as we go. But for now, that is how you can change your quantity. You can also specify the quantity in your exit order. So for example, if you only wanted to exit half of our position, we could set quantity in our exit function to 50,000. And now we will only close out 50% of our long position when our take profit is hit. If our stop is hit, I believe it just exits the entire position. One other way you could exit 50% of your position is to set quantity percent. So quantity underscore percent is only applicable to the exit function. And if we set that to 50, I believe that will exit 50% of our position. But let's get rid of that for now and get rid of our quantity for now and just set it back to the default contract, whatever we've set up our position sizing to be in the properties menu. So let's set it to 1% of equity. Now you can see that we have very small position sizes, and that is because we're not risking 1%. So if this was to be traded in the Forex markets properly, 1% of a $100,000 account would be $1,000. And so you would be risking $1,000 of your capital to your stop loss, meaning that if your stop loss is hit, you lose $1,000 of your $100,000 account. That is not what this position size is doing. This position size is selling 1% of your account balance short, regardless of your stop loss distance. So in other words, the order size settings in our scripts is completely useless for Forex traders and most other markets too, I would imagine. Maybe it works for stocks. I don't know. I haven't played around with that, but it doesn't matter because in future lessons, as I said, I'll show you how to calculate your own position size based on an actual percentage of your account balance, which is how I like to trade. I trade no more than 2%, usually 1% of my total account balance per trade of risk. And then I shoot for at least 1-to-1 as a profit target, usually a little bit more than that, so that I can have an edge over the markets with a less than 50% win rate. That makes me feel more comfortable as a trader, but we'll get into that information in future lessons. Anyway, let's have a look at a couple more parameters here. So we just covered quantity. Limit is your buy limit. So this isn't your profit limit. You set your profit limit in the exit function. Limit in your entry function is a buy price. So if I set limit equals close minus ATR, for example, what this would do is set a buy limit order 1 ATR lower than the closing price of the current bar. Now, personally, I do not recommend using buy limits or stop limits, buy stops. That's what stop is. So limit is a buy limit, stop is a buy stop. So for example, if I set buy stop to close plus ATR, the long trade would not be entered until the current price exceeded 1 ATR above the signal candle of our entry. So it would be a buy stop. Buy stops are used to buy breakouts. Buy limits are used to buy pullbacks. So a limit order below price will not be filled until price gets down there. A buy stop above price will not be filled until price exceeds that level. In PineScript, due to the way the strategy tester emulates intra-bar price action, which I've already covered in a few lessons now, so make sure to go back and watch those lessons if you skipped ahead. It's very important that you understand this information. But basically, I'll cover this in its own specific lesson because it is a very important subject that deserves its own lesson. But I encourage you to stay away from buy stops, sell stops, and buy limits and sell limits in your strategy scripts. Obviously, there's nothing wrong with using them in your trading, but in the strategy scripts in PineScript, it can lead to false results, which we will cover in its own lesson. But for now, just know that you are much better off. You are going to get better results in your strategies if you design them with fixed stop losses and fixed targets and based on candle closes. So you want to enter when the candle is closed. And in fact, we should probably add an extra filter to this script to make sure that that is the case. Because right now, if we were to get a bullish or bearish engulfing candle on a real-time bar that hasn't closed yet, and we're not involved in a position, this strategy script will enter long or short. So what we need to do is also add on here, and bar state dot is confirmed. If this was a real script, this is what I would do to ensure that we only buy and sell engulfing candles when the bar closes and is confirmed. Otherwise, if this current bar exceeds the previous bar's open and we have a bullish engulfing candle printing that has not closed yet and is still active, the script will still go long on the real-time bar. Obviously, that's impossible on historical bars, so you won't see that happening until you run your script for a while on real-time bars. But this is how you stop the script entering on a real-time bar. Use the bar state is confirmed check. So now if I save my code, nothing will change. But if this real-time bar prints a buy signal, it will not act upon it. The script will not act upon it until that bar closes. So the timer gets to 0. Anyway, moving on, we have covered everything so far except for OCA name, OCA type. So those are our one cancels all orders. I won't cover those in this lesson because it takes a bit more of a complex script to be able to demonstrate what those two parameters do. But basically, if we were to set multiple buy orders with the same OCA name or ID, OCA ID, and OCA type, then when one order is exited, either for a profit or a loss, the other orders that share that same OCA name will be cancelled. But we'll cover that in future lessons if you guys are interested in that material. Now, the final three parameters here are quite simple. The first one is comment. So comments are useful for things like we can display our stop loss distance. That's a great use case for comments. it aids in the backtesting process. If you're manually using your strategy script to backtest, you could do something like this. Stop loss equals plus str.toString long stop distance. Now if I close that off, save my code, and we look for a long trade. Here's one here. It's showing our stop loss distance in pips. So we have 0.0011. So I'm guessing that's 11 pips. Let's have a quick look. If I measure from there down to our red line, we have an 11 pip stop loss. Now this is in actual pips with decimal places. I would normally convert this into a whole number. We can do that really quickly using my Zen library. Since we've already imported it, I might as well show you how to do that. So we can go zen.control space to whole and pass in our long stop distance, save my code, and watch this number down here. It's now 11.10. And we can also strip the decimal numbers down here. We can truncate, it's called. We can cut off all of these decimal places so that we just have 2 decimal places here. I'll cover that in future lessons. It's not really relevant to today's lesson, but that is one great use case for comments. Comments can also be placed into your alerts so that you can maybe send third-party API data in your comments, such as your stop loss and take profit distance and other parameters that your third-party API needs to know in order to automatically manage your positions. Again, we'll cover that in future lessons. We're getting way ahead of ourselves now, but that is how comments work. That's how the comment parameter works. The when parameter is exactly the same as our exit function. So if we wanted to, we could say here when equals buy signal, and I could cut this whole strategy.entry function out and paste it in the main scope of our script. So now this function is going to execute on every single bar on our chart, not just when we have a buy signal, but it will only enter long when buy signal is true. So now when I save my code, this shouldn't change anything. We should still be entering long here. There we go. It hasn't changed anything about our script. This is just one alternative way to enter long instead of using a buy signal. You can also do the same thing for exits, but we'll cover that in future lessons. So let me cut that and paste that back in. And the final parameter I want to show you here is alert message. So alert message is exactly what it sounds like. It's just a message you want to include in your alert. So if I click on alerts here and we select our strategy order script, because we are not using any alert functions in here, what will happen is the alert will fire whenever an entry or exit order is detected. So when we enter long, if I set up my alerts here and click create, when a buy signal is detected and the script enters long, I'll be notified on my phone through the TradingView app, and my alert message will be replaced with this string here. So it won't say this here on my entry signal. It will say this on my short signal, since I haven't overwritten my short signals alert message, but I have overwritten my alert message on buy signals. And so all of this data here would be replaced with this text. And while we're here, it's important to mention that there are a lot of placeholders you can use in your strategy alert messages to send data to a third-party API. So for example, strategy.order.contracts would be replaced with your position size. This is very useful for sending data to a third-party API, but again, it's only useful if you are correctly managing and calculating your position size in your script, which right now the script is not. But we will cover risk management in the lessons to come as we build more practical and profitable trading strategies. For now, I'll wrap this lesson up here. This is a crash course introduction to our entry and exit orders. I encourage you to watch this lesson a few times, especially the part of this lesson where we enter and exit our trades. It's important that you thoroughly understand the relationship between entry and exit orders. One last thing I'll mention before we wrap this up is, let's say we had a price action based exit reason. Let's say we enter short here, and as soon as we get a green bar while the RSI is over sold, so here's our RSI, it goes oversold, we get a green bar, those conditions are met, we want to exit our short trade. We could say here, if exit short condition is met, if we created a variable here called exit short condition and we checked the RSI value, we checked for a green bar, etc. We just layered all of our exit reasons. We could then use the strategy.close order to close our trade as soon as this condition is met. One exit reason I actually use in one of my scripts is waiting for the RSI to go oversold and then print a green candle. If that happens and I'm involved in a short trade, I will use the strategy.close function to exit my trades. I forgot that the ID of this close order is the ID you want to close. So again, it's another annoying inconsistency with Pine. The strategy.exit function uses the from entry and has its own ID. The strategy.close does not. So for example, let's do a really quick example here. Let's say if our strategy.position size is less than 0, so we're involved in a short trade, and we get a bar that closes bullish, so higher than it opened, and the closing price is less than or equal to our trade target price. So we only want to do this once we've exceeded this green line. Once we've exceeded this green line, we check if we've got a bullish candle, then we close our short trade. Whoops. If I save this code, hopefully this works and I'm not making things up. I also need to get rid of my short exit limit. So I can set that to NA to make sure that our profit target is negated. So we do not have a profit target now. If I save my code, what should hopefully happen here is we enter short up here and we exit our trade. There we go. On the first green bar that prints after we exceed our take profit line. And we have a comment down here that just says close entries order short. You can also use the parameters here. They're the same as these other two functions. So if I set comment to exit short, for example, now this text here will be replaced with exit short. There we go. All right, so that will conclude this particular lesson. And in the next lesson, we will actually start converting some of the scripts we wrote earlier in the course into strategy scripts. And I'll also include a bonus script where I'll teach you how to write a profitable trading script I've been using for several months now since I learned the strategy called the follow the bear strategy. It's a really simple strategy, but it lends great to automation as well. And so what we're going to do throughout the rest of this section of the course is we're going to build several strategy scripts based on some of the ideas we've already covered in the indicators section of this course. Then once we have our strategy scripts performing properly, then we will use those same scripts to add automation in the automation sections. So Pine Connector and AutoView behave differently. So we'll need to write very different code for our scripts once we get into automation. But for now, I'll leave the source code to this script below the video for you to analyze. Remember, most of this code here is irrelevant. All of this could be anything. Your entry patterns could be anything. Your market conditions could be anything. Just make sure that your indicator values are not NA. And these two checks here are probably important for most scripts. You want to only enter trades when you do not have any positions open and the bar state is confirmed. Aside from that, so long as you're saving your stop loss and take profit price and passing these values into your strategy.exit functions, your strategy scripts should perform properly on historical data through the strategy tester. So with all that said, I'll wrap this up here. I hope you found it interesting. I hope you're excited to start building your own tools and practical trading scripts to potentially trade the markets with. I'm not saying you should, but the scripts I will be showing you from now on will theoretically have an edge over the markets. Most of them I've used, in fact, I believe all of them that I'll be showing you, I've used to trade profitably in my own trading. Now, I'm not encouraging you to trade them. There is the chance that you may lose money with them, a high chance, especially if you're new to trading or don't understand risk management and how to build an actual edge over the markets. But all I'm saying is that the scripts to come will be examples of practical strategy scripts that you can use to trade the markets. So I hope you're excited. I'll see you in those lessons to come.